Sell-off yesterday, Jim, you've been tweeting quite a bit about sort of the bipolar nature of the market and sort of economic attitude right now.
Right. I do not like a market where last week we are really fretting because oil went down, okay? And this week we're really fretting because oil went up. And what that says is it's a bipolar market. It needs medicine. We don't even know. Combination of psychiatric and medicine could cure this. But, David, I don't see any sign that this market is on its meds or having any therapy.
Well, you know, those who have been negative on the market for some time and obviously were on the wrong side of this very powerful rally are still, at least as a group, of the belief that we are potentially going to retest lows.
Two people told me in the last 24 hours, 2008. Yeah. Go back over 2008, Jim.
You know, a lot of this rally was short covering. Equities are misjudging things in a way that the bond market is not. The buyback machine has been turned on by corporate America. That's masking what really is limited demand for equities, and on and on.
Well,
I don't know.
Did they listen to Nikesh Arora last night on Palo Alto, where he's basically wiping the fleet? He's a combination of the Houston Astros and the New York Mets pitching. I mean, I'm telling you, the guy is all-star, and he is just crushing it. No one crushes it in a real bear market. You could come on air and say that stuff, and the stock would be down 10%. I think if you do great, your stock goes higher. And to me, that's an opportunity to buy Walmart, which I don't really care for, but stock's down quick 6. I am saying watch retail. Macy's was okay. Dick's was quite good. Watch retail. And it's retail versus the 30-year.
But you went away from the broad market very quickly.
Well, because it's stock by stock.
It's stock by stock. Okay.
It's stock by stock. Stock by stock.
I heard you.
Did you listen?
Stock by stock by stock. I did not.
You didn't listen to my show?
Sometimes I do, and sometimes I don't. Last night was one of those nights I didn't. I'm sorry.
So Nikesh Arora basically just says, business is unbelievable. I mean, now look, he's taking it from CrowdStrike. He's got a cloud-native business, but I just think that the whole spend that we keep hearing about, that is, no one's spending on software, no one's spending on even on cyber, is wrong. But then you go to Zoom. Nikesh Arora was fantastic. That's a Palo Alto. But Zoom was about as bad as it gets.
Yeah, let's stick with Palo Alto for the moment. Bunch of well-received notes today. Wells, RBC, Wedbush all increased price targets. Morgan Stanley's talking about joining the S&P with their gap earnings.
And David, $900 million buyback, Mr. Non-buyback.
Oh, I didn't say that. I said buybacks are in full force, but they may be masking what is otherwise tepid demand for equities.
Okay, there's not a lot of buybacks that are in full force masking tepid demand. They're not.
Okay.
There's just companies that are doing quite well, like Palo Alto, and companies that are doing poorly, like Zoom. Although Zoom put on a very good face. When you listen to these calls, Carl, what we're finding is there are companies that are doing quite poorly, and they just put lipstick all over the whole. When you have a lot of hogs, what's it called? Like there's like a gaggle, and there's what's a
group of pigs.
What's
what is it called?
What are hippos? That's a good one.
A hippo. A group of hippos?
It's like a murder of crows, parliament of owls.
Well, I mean, they got enough lipstick there. They are like all of Elf and all of Estee Lauder cannot put Zoom back together again. What?
Why?
Well, because they have a very bad consumer in the enterprise. And there's this company called Microsoft, which if you put on your PC, Teams comes up, whether you like it or not. And remember the old days when Microsoft got sued by Justice?
Yes.
I mean, I think Microsoft is lucky to have Zoom, so they're not sued by Justice, by Jonathan Cantor and antitrust.
Well, Cisco's there with WebEx as well, right? Or no, that's much more enterprise.
Yeah, it's more enterprise.
Still got $5 billion in cash, right?
Yes, but they've been failing and coming up with something else. They talked about their meager call center effort. Frankly, I found now my stepson worked at
Zoom.
Not anymore.
We're talking about Zoom here.
Well, no, I'm doing security.
Okay, you're all over.
And I'm doing.
Just trying to help the control room keep up with you with the graphs.
I'm just doing the two companies that reported last night. I'm saying that they were in a bear market. We have a propensity for Palo Alto to go down too, not just Zoom. But in a market that's okay, like we're in, Palo Alto goes up big and Zoom does not go down that big. And that's all. All I'm saying is it's rational. Okay.